One of the biggest problems we are now seeing right now are people are still stuck with a myth, which is metro being better than regional markets. Property investors could be overlooking one of the biggest opportunities heading into 2026 once again. Across Australia, there's a lot of discussion around tax changes, negative gearing, and capital gain tax. Whilst many people are focused on uncertainty, smart investors are starting to focus on something else entirely. And I'm going to give away this today. Affordable, high demand property markets are absolutely the way to go forward, especially when you are investing for a portfolio build, because regardless of policy changes, one thing remains true. People will always need quality housing they can actually afford. So let's break this down properly. Hi, I'm Anubhav, founder and director of Find My Real Estate, a leading property buyers agency, and in this video I'll explain why affordable property could become even more important in the next phase of the market. No hype, no shortcuts, and no rich quick nonsense. Just what's changing, why affordability matters even more than ever, and why smart investors may start paying attention. Look, firstly, at what we are seeing right now and what's happening. Most people are trying to find properties with high rising interest rates that what can I buy, where can I buy? And that's true even for first home buyers. There's ongoing discussions around negative gearing, capital gain tax, and a lot of fear around mongering, which is sort of not helping people to make the right decision. And naturally that creates headlines and uncertainty. And here's what experienced investors understand. Markets adapt, and when borrowing actually becomes tighter or cost increases, demand often shifts towards lower entry price point, stronger rental affordability, properties with sustainable cash flow. That's why affordable housing markets are becoming increasingly important, which was the same during COVID, and it's happening again. Because in every market cycle, affordability drives demand. Let's say it's easy to buy a $600,000 property than $1 million. Would you agree? And if higher end properties become harder to hold due to high interest rate, higher taxes, lower borrowing capacity, what will people do? The buyers are looking for bargains right now, and actually the right properties. What does that mean? A lower price point, affordable growth corridors, and entry-level investment properties that can actually create stronger competition in those segments. Now think about this from a tenant's perspective. As living cost rises, renters also prioritize affordability. That means well-located, lower-cost properties can continue attracting strong rental demand. So instead of focusing on what if taxes increase, many investors are asking now which properties remain affordable and in demand regardless of market conditions. Think about this. If you were back in 2019 and 20 right now, wouldn't you want to buy a $160,000 investment property that we bought in 2019 again in 2026? Of course you would, but you don't find one. That's exactly what I meant by affordability. It comes back to fundamentals. Buying at the right price, holding quality assets, maintaining manageable repayments, investing in areas with real population growth and infrastructure, because affordable properties often provides something powerful, more flexibility, lower entry cost, potentially strong rental yields, reduced holding pressure, broader buyer advantage, and in certain environment when there is so much uncertainty, you can zoom out and look at what Australia is going through. What do they need with housing shortage, strong migration and population growth, ongoing demand for affordable accommodation? That's what is driving growth, and it has been happening for the last 6 to 7 years, but people ignore that. They still go to blue chip suburbs that are not making sense for $1 million property. It does not make sense. Majority of the focus for renters and buyers is now about what can my money buy, and when cost of living is going up, it becomes increasingly important that at a lower price point in good markets, if you can secure something that's making sense, it's giving you rental income, it's got the growth opportunity, it is still getting to the double-digit growth in the right markets across Australia, that's when it becomes financially stable in long term. Focus on areas where demands remain consistent, because at the end of the day, it's not about paying taxes, it's about building wealth first before you pay taxes. And affordability with the right demand, right area, right property decisions, with the right strategy in place can completely change the outcome in the next 5 years to 10 years. Those who are earning positive gate income right now from commercial properties don't care about what's happening with actual interest rates. Similarly, When you are looking at affordable markets and you're buying in the lower segment of the entire market, you're actually looking at growth because there are more people buying those properties than there are actually people selling. So think about this again. In a $12 trillion market, you're trying to buy a small piece of it that's going to not only give you wealth but create legacy that you deserve. Talk to Find My Real Estate and we can help you understand how to get there, how to build a sustainable portfolio and get moving today in 2026.